What's up everyone, Canadian Futures Trader here. Today's video, one of my favorite PowerPoint presentations. I'm going to explain why you, as a futures trader, should open your own futures brokerage account. In parentheses, stop being a rookie. Guys, let's get into it.
Gotta get more followers.
First things first, my website, CFT.ca, your home for the latest, greatest trader evaluation, deals, promos, discounts, free courses, lots of articles, promo alerts, everything you want in the prop world. Even though, guys, today I'm going to be focused more on the brokerage side, why you should be opening a brokerage account. I know most of my audience is trading props, so let's get to it. As far as my trading background, for anyone who's not familiar, I started trading futures in 2020. I spent months prior researching futures trading, funded programs. There was not a lot back then, believe me, trading methodology, etc. I started my YouTube channel in 2020. I was tracking my progress in a few different evaluations. Shortly thereafter, started CanadianFuturesTrader.ca or just CFT.ca. With information for newer traders, developed the free course in late 2021 with what I was doing. I was having some success finally after my first year in futures trading. And I passed evaluations with several companies in excess of $2 million in funding. It's actually much more than that, but I did not update the slide since I last used it. And I mean, I put in here, I haven't had a real job in quotes since 2007. I'd consider it a real job where you actually work for someone, work for a company, etc. So been a long time, and I mean, it's been almost 2 decades, and never plan on going back. So I want to start first, guys, actually with the not negatives, but the reasons I often hear as to why people don't want to open their own brokerage account. And when I say this, I'm comparing it to the prop firms, right? So buying an evaluation, going through that process. So we're kind of using the two against each other here. So leverage, trading 10 lots in a real account requires, pretty decent margins. You have to put up money to trade any given product, and margins vary by product, very much so. And a thing I didn't write on here is they vary by broker as well. And as well, they'll vary by, I want to say, time of day or just what's happening. Like if a big news event is coming up, the margins will increase. So for example, ES or NQ might be $500 a lot, with some of the brokers in the USA. And I know most of my audience is in the USA. Even though I'm a Canadian futures trader, a lot of this information is USA based, but I did write in through the video here so Canadian and other country references. So in the US, though, you could open a brokerage. I'm going to talk about that shortly. It might be $500 a lot. So if you want to trade 10 contracts or lots, you would need at least $5,000 in your brokerage account just to cover the margin. And then you need additional money in there to cover the swings, right? Not every trade is a profitable trade. You're going to need some capital in there just to trade, for example, 10 lots, where you could do that in a fairly cheap, evaluation. So I get it, guys. Other countries even higher. So I'm in Canada. I use Interactive Brokers. I looked these up literally today before I made the video. Interactive Brokers. So if I write BKR, that's Interactive Brokers. And this isn't a typo. $15,000 per ES lot or $24,000 per NQ lot. So people in the US really have it pretty good. When you're only having to put up $500 a lot for, say, ES, Canada, $15,000 per ES lot. Just the way the rules are in Canada, a lot more conservative when it comes to risk financially, I would say, in my general observation. I've lived in the US. This isn't just futures trading, I would say. So yeah, it's a hefty sum to put up. And the last point here I want to make is this video isn't intended to say you should open up a brokerage and never trade props. I'm saying you can do both. You can still trade the props, and I do, and you should open an account. So I want to give you some of the reasons why you might want to consider opening an account to sort of augment, to add on to your trading portfolio. So let's get to some of the positives now, guys. Now, I would say trading for yourself, and by yourself, I mean in your own account, is the ultimate goal. And I feel like 95% of the population out there in the prop world, in my encounters, doesn't even think of this. Like, it isn't even on their radar. I believe it should be the fourth step. So you do the evaluations, you go to sim funded, and this is most firms, right? I'm kind of generalizing, but I would say this is the bulk of the firms. Then you move to live trading. So that's step 3. And that's kind of where most people see the end of the road. I move to live trading and I'm done. I trade my live account and I make a bunch of money and then I go buy whatever I want. Unfortunately, I hope this resonates with a lot of people. That's not usually how it goes. But I really believe the fourth step should be open a brokerage account. And I want to reiterate the point. You can do both. You can open a brokerage account and still have the prop firms. I do both. I have accounts at several of the prop firms. I also have 2 brokerage accounts. You can do it all, guys. Have the world. It's all at your disposal. So let's get to some of the reasons why. I want to make the argument why you should maybe consider this. And I know after this video, some people will still say, nope, not for me, because maybe you don't have enough money, doesn't make sense in terms of your goals. That's fine, but I want to at least present the options to people, kind of open your eyes to this world of actually opening a futures brokerage account. So number 1, you can set your own rules and you can withdraw daily. So I see people complaining out there in the futures prop space all the time. Daily loss limits, why they exist, consistency rules, I need a buffer. I have this profit goal. I'm in a winning trade. I should be able to let it run. But because of the consistency rule, I can't just let that trade run. I've heard it all, guys. I've been around for several years in this industry, one of the OGs. Open your own account. You can basically do whatever the hell you want. I mean, within rules of margins, which we kind of talked about, and CME rules. You can't go long and short in the same instrument and types of things like that. But when it comes to other things like daily loss limits, you can not have none, or you can actually take a step further and you can ask the brokerage to set daily loss limits. You can also have them set profit lockouts. You're like, hey, if I make $1,000, lock me out of in a day, lock me out of my account. All these options are available to you, and it's kind of nice. I've seen over the last several years, brokerages really evolve. Like it used to be where I had to email in and say, hey, set this rule, set that rule. And now you just do it all your own in your own account online. So you can set your own guardrails or set no guardrails if you're feeling risky. And as well, when you make money, withdraw it whenever you want. You don't need 5 trading days. There's no you can only withdraw 50% of your profit. Oh, you have to be above the buffer. Any of this nonsense, guys. And I know when you move to full live with some of the prop firms, it is a little bit more close to this. But again, I'm going off my observation, guys. I feel like I have a pretty keen eye on the industry. Most people aren't making it to the live accounts. They're at best in the sim funded stage where you do have these rules. You can only withdraw after 5 days. You can only withdraw $2,500 a week or $5,000 most a month. There's all these rules on you. Your own account, literally do what you want. Set parameters if you want. Withdraw every single dime in your account if you care to. So guys, it's actually pretty easy and pretty low cost to open a brokerage. Now, when I say low cost, again, I'm referring more to the USA. I will talk about Canada here, but I almost feel like there's this stigma out there, it's easy to sign up for a prop firm and trade an eval and move forward. Opening a brokerage account, I got to actually submit an application and do whatever. It's not that difficult, guys. You fill in the quick application, there'll be a minimum deposit to set up the account, and boom, you're off to the races. So USA, I wrote, it's fairly easy. Most brokerages, it's a $500 minimum deposit. I should mention too that it's not on here. There's usually no monthly fee. It's not like a bank account where there's a monthly fee and you're thinking, I deposit $500, but they're going to take $10 a month for a fee. No, it's like commissions. So you'll pay commissions when you do trade it, but if you're not trading it, you're not paying commissions. So it'll just be sitting there for when you're ready to trade it. So it's fairly easy to set up. So even if you don't foresee yourself trading your own account in the near future, as we go through this video, hopefully you see some of the reasons you might want to consider doing it. So I also wrote, in the USA, there's many choices, just to name a few. NinjaTrade Brokerage, who I actually have an account with from my USA days. Tradeovate. Now, NinjaTrader bought Tradeovate, but they're still separate in terms of you can actually open a Tradeovate account. I actually have a Tradeovate account as well, which I never use. I just realized that. But anyways, you also have companies like Optimus or GFF Brokers who I've talked to, Iron Beam. I don't want to get too in the weeds. They're what's considered introducing brokers, but same thing. You get low commission rates, minimum deposits $500. There's AMP. and there's other ones as well. So you have a litany of choices in the USA. So it's certainly not for lack of choice that you couldn't open an account. Canada, there's definitely like less choices. I already referenced Canada's definitely a little more difficult when it comes to sort of finances in general and regulations and stuff. And NinjaTrade Brokerage is open in Ontario as I make this video. I believe that's the only province. AMP is in some provinces. I believe it's only 3, and I don't want to name them off because I always get it confused. You can look to those as well. We have interactive brokers where I already talked about margins are super high. I believe there's like a $10,000 initial deposit, I believe, but that's honestly who I use myself in Canada is interactive. GFF, the US one I mentioned, because they're introducing brokers. Last I knew, they also took Canadians. And then they will pair you with a US brokerage that works with Canadians. I know a lot of Canadians that use them. I believe Optimus as well does work with Canadians, but don't quote me on that. Personally, as to why I use interactive brokers, when they seem, we obviously went through the margins, they seem prohibitively high for a lot of people. They do offer like a full suite of, they are everything, guys. They are, stocks, options, FX, futures, retirement, it's kind of a one-stop shop. So that's in part why I use interactive. And then when it comes to other countries, guys, honestly, I don't know whatsoever, but I have heard in general, you're not going to get it as easy as the US. So it's going to be more like Canada, where there's not as many choices and margins are probably high. So I get it. That's probably a stopping point for some people, but want to at least make the case. So another reason, you can swing trade, you can spread trade, you can do other types of trades, but I want to focus on those. So you can use strategies beyond day trading. Any of these prop firms, it's day trading, right? You need to be closed by 4 o'clock or 4:15 or 4:55, whatever it is, you need to be done. A select few have like swing accounts, but they're not popular whatsoever. In your own account though, you could swing trade. So as long as you meet the margin requirements, again, do what you like. So let's say you have a long term, even if it's like a week long term view of your favorite product, you could buy into a position or sell the position and hold it hold it overnight. You don't need to be in and out of it the same days. And then there's also spread trading. So myself, will speak to my own efforts here. It's what I've been doing a lot more. I've been spread trading, so buying and selling different months products based on correlation. So this isn't a course on spread trading, but you've got calendar spreads, intra-product spreads, intra-market spreads. I'm calendar spreading lately: corn, cotton, coffee, natural gas. I put up a screenshot there, but before I get to that, as well, when you open up a brokerage account, you get span margins. So basically your brokerage recognizes that going long, for example, here I'm long in the January natural gas contract and I'm short in the February 2026 contract. They recognize those two offset in risk and they give you the ability to trade much larger size. So that's what span margins is at kind of a very high level. And you get that in your own brokerage account. This, for example, it's not in the screenshot, is 70 lots on each side. So I'm trading 70 lots of NG. I'm trading short 70 lots of the February contract. I don't expect everybody to run out and, read up on spread trading. But I want to tell you, there is a world beyond day trading that can be far less risky and far more profitable. I'll leave it at that. That's where I would hope people graduate to. Another reason, there's big tax benefits. So a few of the prop firms, when you go full live, these will also apply, but not many. In summary, with the prop firms, you're considered a contractor and you're paid. And again, this is more USA based, but I would say it probably then applies to whatever country you live in. So you're paid as a contractor and you pay taxes as ordinary income, right? So with your own account, now again, this is the USA, it also applies in Canada, you get the normal capital gains tax rates. Basically, without getting into the nitty-gritty of taxes, it's much more favorable to be taxed at the capital gains tax rate than as ordinary income. Again, varies by country, depends on tax rates, blah, blah, blah. But in general, with prop firms, you're getting paid definitely in the sim funded phase as ordinary income. You're being paid as a contractor. When you move to full live as well, some firms will bring you on as a partnership and you'll be issued a form K1 if you're in the United States. I will say too, though, honestly, if you're outside of the United States, so for example, I'm in Canada. Even if I trade with one of the firms that does pay their USA traders as a partnership and they get the corporate rates, I wouldn't benefit that from being outside the United States. Punchline, guys, you will always get better tax rates on your own money than with the firms. And that kind of goes hand in hand with some other points I'm going to make, so I'll probably actually reference back to this in a few minutes. You can also trade in your own account other markets. Believe it or not, guys, it amazes me daily when I see people ask questions and whatnot. There are other products beyond NQ and ES. I would 100% say these are the rookie move. I would say 9% of new traders gravitate to NQ and ES, and probably NQ even more because it's exciting and it moves fast and it feels like gambling, and that is not trading, guys. So stop trading those and being a rookie, but maybe that's a different video. There's other exchanges though. The ICE, the Intercontinental Exchange. That's where your friend CFT here is trading coffee and cotton and other soft products. There's also the Eurex. You got your DAX, you got the Euro Treasuries. Trading the Buxel, the Euro 30-year, the German 30-year treasuries. So some, again, very few of the prop firms offer the Eurex. I don't think any of them offer ICE. I'm vaguely thinking of one that might, but far and few between, guys. You're not going to find these in most places. So there are other markets and other products that you could be trading in your own account. Some other benefits to other markets. If you're in another part of the world, basically you're not in kind of the America's time zones, some of these markets just might work better for you. Part of why I started trading the Eurex is I'm off to Australia for several months over the winter months. The Eurex exchange will be far easier for me to trade than the USA markets. I would say also some of these other markets, I mean, besides just opening an array of other products for you to trade, some of them just flow better. So the Euro Treasuries, personally, I believe they ebb and flow even better than the US Treasuries. As well, you're not subject to the USA news events. You know, things can get pretty squirrely in the USA when certain things happen. There's, news releases, certain people tweet stuff. The other markets like ICE and Eurex aren't nearly as impacted by that stuff. You'll find them much more tame. So good reason to do so. This one's fairly simple. You keep 100% of your profits, right? Trade your own money. Whatever you make is yours. Anywhere else, at best, you're getting 90-10 split. At best. A lot of places are 80-20 when you go live. So if you actually plan on making a substantial amount of money, which from what I hear on the internet is what most people think they're going to do in futures trading, you're paying a premium by trading prop. Easy example, you make 100 grand. Your own account, you keep 100 grand. Prop firm, you keep 90 grand. Giving up 10 grand. I said I would reference back to the tax thing as well. Here's where the taxes also come in. Imagine paying a much more favorable rate on that 100 grand versus you only get paid 90 grand and you pay a worse tax rate on it. Guys, you're going to come out far more ahead trading your own funds. This should be like clear as day. Another benefit I found for myself, I can speak for myself and from what I've heard from others, when you're trading your own money, you tend to take trading a little bit more serious. So definitely a very gambling feel with the prop money out there. I see it daily. You might consider yourself the exception, and I applaud that, but I feel like a lot of people aren't being honest with themselves, and they'll sign up for 20 accounts, and they just go for it, and if they blow them, well, it's cheap, I'll just buy another one. Or they get, how many stories have I heard of people at least getting to the sim-funded stage, and their mentality changes because all of a sudden XYZ and they blow those accounts and then they're back to step one. So there's like this hamster wheel of, I'll just sign up for more evals and pass and move to sim funded and hopefully trade the 5 days and make it to withdrawal stage, but I can only withdraw $1,500 because that's what I'm capped at. I encourage people to take a step back. If you actually are planning on trading futures as a career and as an income stream long term, you might want to think things through. Trading your own money might kind of force you into that situation. Like I said, definitely can say start trading my own money. You definitely think twice about YOLOing on those ES contracts. And actually that isn't personal experience because I would never do that, but it might help some of you out there. Another thing to consider is, you really are at the whim of the various prop firms when you're trading the prop firm money. Guys, I've been around for 5 years, which in this industry is an eternity. I'd consider myself definitely an OG. There was only about 4 or 5 firms in existence back when I started. The prop firm industry has changed a lot in the last 5 years. I mean, besides the fact that there's about 100 different firms now, they all have different rules. They all are looking for reasons to blow your accounts and sim fund it. There's also long been talks of regulations. Hasn't come about. I thought it would come sooner. It hasn't. But it's not to say that they won't come. And who knows what those regulations would be. So I've seen a lot of change in the last 5 years. I fully expect more and more changes to come. Some will be good. Sure, some firms change for the better. But it doesn't necessarily mean that everything will be for the better. You are at the whims of the firms whose money you are trading. And again, a lot of people are just stuck in that perpetual hamster wheel. They do evaluations. They finally get some sim funded accounts. Hopefully they get them to live. But I can tell you guys, knowing the percentages, very, 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 very few people make it to full live accounts. So if you want to skip the evaluation like you can with some firms, what you really could do is open your own account, put money in it, and congrats, you skipped all of this. I'll say too, part of what led to just this slide in general is an argument I often hear is like, why bother opening my own account? I'll just trade the prop firms. I get far better leverage. Like back to that one of those original slides. I can trade 10 lots. I don't have to worry about margin. I can go for it. That's great, but what happens when the day rolls around where you are limited by number of accounts you can have? Again, I'm not trying to make the argument that you should stop trading prop firms. I'm trying to make some arguments on why you might want to consider augmenting that with your own account. So final points, get past the money focused short-term mentality. Huge problem in the industry, guys. If that's not you, fantastic, but I can tell you that it is most people. I've seen people, the stories I could tell, I'm already thinking about a different video I can make, which will probably be a lot more harsh towards newer traders who talk a lot of game and have zero trading credentials and will just be stuck on that hamster wheel. I would like to encourage people to think long term, not just about your next evaluation. Again, I'm not saying prop firms don't have their place. Both can exist in your own life. I have both. I have several funded accounts, but guess what, guys? Those profits end up ultimately in my own brokerage account, which is growing and growing. And honestly, not to be a doomsdayer in the prop world, but what if? Like, think ahead. What if there came a day where prop firms didn't exist, guys? The CME has had enough of the nonsense, the litany of firms, and a lot of things get shut down. I've got my own accounts to trade. Do you? So I always lean towards my own capital. Besides the fact that I'm getting more and more into more advanced strategies like calendar spreads and whatnot, trading other markets, ICE, Eurex, I think I've made a good case for why you might want to consider just starting to just take a step, guys. Take a step on the wild side. Think about opening a brokerage. So guys, in the prop world, I do have my site, all the deals and discounts and reviews for the best firms, guys. Unlike most affiliates who are out there promoting every single firm that comes their way, I believe I only have 8 firms on my site currently. Only work with the best of the best, funded with most of the ones that I have on my site. I would encourage you to do that. When it comes to brokerages, I named several earlier. Really depends on where you live in the world. I have nothing bad to say about the ones I've been with. NinjaTrade Brokerage, Tradeovate in the USA, Interactive Brokers in Canada. I do know GFF is fantastic for both. You might want to give them a look if you're considering, but as well, honestly, Ironbeam and Optimus, great options as well. If you're in other parts of the world, can't really help you. I know Interactive is pretty worldwide, so you probably look into them. And that's all I've got for you guys. So I want to thank you so much for watching. Hopefully I inspired a few people to at least go Google, go consider opening a brokerage account. Starting on I would consider it a step towards becoming an actual professional long-term futures trader. Get off the hamster wheel, guys. Take a step over to the good side. I'll see you in the next video.